I made a post yesterday stating that stock ELEV was a stock that was new on my swing trade screener. And today, that stock is up over 15%. The next day, after the stock appeared on the screener, up over 15%. You can still see the stock sitting on the screener here, and you can see that I have an automated backtested strategy that has entered the trade as of close yesterday. In today's video, we are going to cover both of those things, the strategy and the screener. So open up a notepad, get ready to take some notes. I truly believe this is going to add a lot of value to your trading. Like the video before we get into it if you're excited. And let's go ahead and get started. Firstly, I want to show you all some chart examples just so you can get an idea of the potential outcomes of this strategy and sort of get a larger overlook of how it trades. So I've gone ahead and I've turned on the floating P&L study within Thinkorswim. And what this is doing is it's showing you the profit and or loss of whatever strategy you're running on the chart. So you can see on ELEV on the all-time daily chart, taking $10,000 positions. I currently have the strategy set to $10,000 positions, which of course, as always, can easily be changed. But taking $10,000 positions, the strategy is up $6,300 right now. You can see a past trade taken on ELEV in at 264, stopped out at 441 from earlier. If we go ahead and click through some more stocks, Quad C, it is in this stock right now, actually, from 507, whatever the close of this day was, currently up $5,000. ALT, up over $20,000. ARDX, down $2,400. As you all know on this channel, we don't pretend our strategies always win. They don't always win. There's going to be losers. But what do we just click through? A $20,000 winner, $2,000 loser. On ZIM, up $2,500. CHRS, down $6,000. Once again, another loser. MRSN, up just shy of $20,000. CYTK, up just shy of $17,000. Actually got in this right after the gap, which is interesting. But you see there, yes, there are losing tickers. Yes, there are stocks that the strategy isn't making money on. But note the size of the losers versus the size of the winners. And at the end of this video, I'm going to give you all an in-depth back-tested breakdown of the numbers of this strategy. Win rate, average win, average loss, P&L, all that stuff. So stick around to the end if you want to see some more raw data. So now that you've seen the potential profitability of this strategy and screener, by the way, ELEV now up 17%. I'm obviously making this video during the market day. This stock from my screener post yesterday keeps soaring. Anyway, now that you have seen the potential profitability and the power of this strategy, I am contractually obligated to let you know where you can download it from. And that is, of course, daytradingstrategies.net, where you're going to be able to download this screener and this strategy and all of my other screeners and strategies. There's all kinds of interesting stuff for you to click through in here that I think is really going to add value. These are all strategies. These are day trading. These are swing trading. All these things are available to you from this website, daytradingstrategies.net, for one low cost of $25. I'm not trying to rip anybody off here. I'm not trying to make a living off this. Just trying to get a little bit of kickback for the hundreds of hours I have put into this stuff, right? So if while watching this video, you think that this is potentially worth $25, it's going to add $25 worth of value to your trading. Check out the link at the top of the description down below, daytradingstrategies.net. We'll see you over there. Let's now jump into the stock scanner. This is going to be where you are finding these types of very strong stocks on the daily. If you couldn't tell from the sort of overview we did earlier in the video, this is a continuation strategy. This is a buy high, sell higher strategy, not a, buy the dip and hold for months and hope for a turnaround. You are looking for strength now, and you are looking to capitalize on that strength now with this strategy and screener. So the first couple of things on here are just some sort of administrative things, some things I put into every one of my Thinkorswim screeners just to keep a lot of the junk off. I have my close set to a minimum of $1. You don't even need to do that. Maybe a lot of you out there are penny stock traders. You don't even need to have this one if you want to see penny stocks. I personally am not, so I have that set. And then I have a minimum market cap of at least 0.01, because for whatever reason on Thinkorswim, if you don't have this, you end up with a bunch of just like crap that never actually trades. So this is just sort of an admin thing for me. Anyway, let's jump into the meat and bones, our custom studies that we have set down here. And the first one is looking at the percent change study, and it's looking at it from the current bar, from 1 bar ago, and from 2 bars ago. And if we go into the edit, the current bar has a percent change over the last 14 bars of at least 30 or higher, right, is greater than 30. And that is true for this bar, 2 bars ago, and 1 bar ago. So what that means is for the last 3 bars, if I actually go into the charts right now, and let's turn on the percent change study so that I can show you exactly what I'm talking about. And let me move my head out of the way. So for the last 3 bars, so it entered at the close of this day, yesterday, January 9th, it entered at 196, right? Well, on January 5th, the percent change was 78. That meaning that the close on this day was 78% higher than the close 14 days ago. Then the next day, the percent change was 254. This is obviously a little bit of an extreme example. You're not always, if it's a little bit rare actually, to be jumping into stocks that are this damn strong, but it's a good way to lay it out. So from 78 to 254, and then on the bar it closed on, it's measuring it also on the bar it closed on. Of course, the percent change was 307. So what that's doing is it's looking for continued daily strength. You don't want to just be buying into the first pop, right? How many times do you see a stock pop and drop over and over and over and over again? And it's not that it won't happen, right? That's also going to happen to you with a strategy like this. No such thing as a strategy that wins 100% of the time. I showed you guys some losers already. You know how transparent we are on this channel. But once you get kind of 3 days in a row, it obviously, as you may or may not be able to tell, is lending itself towards a higher percentage chance of continuation. By the way, now this stock is now up 24%. It just continues pushing. What a trade this is. But that's the first sort of indicator I have set on my scanner, and that's the real meat and bones of the scanner, right? Because the next custom indicator is simply that the volume from last bar was over 5 million, or the average volume from the last 14 bars was over 5 million. Essentially just, we don't want to be trading extremely low volume crap with this. That's what I have that set to. So that's the screener, and hopefully you all see some potential other applications of this screener. You can take a screener like this, and this is what I want you to do. If you navigate to my website, daytradingstrategies.net, decide to download this screener, I don't necessarily want you to just use it exactly like I'm using it, exactly how I'm showing in my videos, right? You need to figure out what works the best for you. But when you have a screener like this that is returning these super strong multi-day strength charts like we've been looking through, hopefully you can see some other applications of this. Maybe you turn this into a stock that you day trade now because you see the strength. You want to trade some intraday strength on this rather than swing trading. And any of that is perfectly fine. There's many applications for a screener like this. We obviously just gave the whole thing to you on this screen, but there is a little bit of complexity and some custom code. So if you would rather just download it yourself, once again, link at the top of the description. Now, let's jump into the actual swing trading strategy and go over some data there. So I'm sure the first thing a lot of your all's eyes went to when I pulled up this strategy on my chart was this cyan line, and as I scrolled through some other stuff, this salmon colored line. And a lot of you might have immediately gone, ew, why are there lines on your chart? And I understand that. I understand that sentiment. But what these lines represent is simply the price action level that I plan to get stopped out at. I just like to have them visualized on my chart. If we go ahead and jump into the code, I will go over these levels with you. So the S plot, this is the close of previous bar minus the ATR from previous bar, ATR being average true range, meaning however volatile the ticker is. If it's more volatile, you're going to get more room to breathe to the downside, whereas if it's less volatile, you're going to get less room to breathe to the downside. I really enjoy using this indicator to objectify stop losses, right? To objectify where to exit my trades. And then I multiply that variable by 1.5 just so it has a little bit more room to breathe. That's what I found worked best in my back testing. So this one, the S plot is the cyan colored line, and it's based off of the close of previous bar. So this is the line that is always tracking the price. This is going to be your profit take stop loss, right? This is going to be, hey, you're up a lot of money and the stock starts to come down, you get stopped out. Let's go ahead and show you this example of that again. You're up a lot of money, it makes a sharp move down, you get stopped out at that line. So on this day when it started pulling back, that line was at 440, and you can see that the trade executed at 440 there to get out of that trade. So the next line and the next level was the same valuation. It was ATR times 1.5 to the downside, but it was from entry price. And that's what this salmon colored line is. And for this being your obviously stop loss, the bar needs to close below it. And if the bar closes below it, you will get stopped out. So that is your bottoming floor, because obviously look at what the cyan colored line does here on the way down. It continues basing off of the close. So really, unless you get a really volatile move down, you're not going to hit this line. So what ends up happening in kind of the first iteration I did of this strategy, I didn't have this hard stop set in. What can end up happening is the stock will just grind down and grind down and grind down and grind down, but never actually hit this sort of more volatile ATR times 1.5 based on close. So I gave it the ATR times 1.5 from entry price, just to have a little bit of a tighter stop loss to help keep the losses small, right? And if I can go ahead and find you one more example for how we exit this strategy here. Here's an example right here. Another reason why we would get out of a trade is if the percent change, once again, we talked about percent change. You all already know that's why I entered trades, because the percent change of 3 bars in a row is over 30. That's when I enter. Also, if while you are in the trade, the percent change goes below -10, you get stopped out as well. So on this day, the percent change closed at -12. It obviously sold the close of that bar. And this is a perfect example of why I set that as our third and final reason to exit this strategy. Look what happens. You get in, the stock makes a nice move, but it never quite makes that volatile, sharp down move to get stopped out and to lock in profit. Never quite makes that move. So the stock ends up just grinding all the way down, and it would never touch this blue line until all the way down here at 879. So what would have ended up happening in this case without this percent change -10 stop loss is you would have gotten in at 1140. The stock would have gone to 14, and then you wouldn't have gotten stopped out until it closed below your entry price minus ATR stop loss at 1020, and you really don't want that to happen. I mean, you're not thrilled when the stock goes to 14 and then you still get stopped out at 1130 for a break-even trade. You're not thrilled when that happens either, but it's way better than having a stock rip and then you end up losing money on it, right? So that's our third and final reason for our stop loss, for our exit of this strategy. Once again, already covered the reasons to enter, the same reasons that we went over in the screener. And if you download this study, you're going to get access to all of this code, so you can take it, manipulate the code to whatever works best for you. And as I showcased a little bit earlier, in the cog setting of the code, you're going to be able to come in and set this position size to whatever you want. So say you want $5,000 positions instead of 10,000, you will notice that it took half the number of shares, right? So you can easily manipulate that as well to whatever position size you want to trade. It will automatically change to that position size with that one simple setting. Once again, available on my website. First link at the top of the description. I promise you I won't mention it anymore this video until maybe the outro. Now, I know it's getting close to the end of the video, but now is when we jump into the real meat and bones. Now is when we're going to go over the real back-tested data from this strategy. I have put every single trade from every single stock on this scanner into a back test, and you're about to see those numbers now. Before I pull them up, let me just say, if you've made it this far in the video, I'm not saying you're going to be the next millionaire day trader or stock trader, but you've got what it takes. You're actually willing to fully study and really invest and really get down to the data and the finite, minute points of strategies and of education rather than just getting a quick idea and trying to move on with that. So don't tell the others I said that, but good on you, right, for making it this far in the video. So let's go ahead and pull up the data now. So if I go ahead and slowly scroll through this, you will see this is every trade, almost every trade. I'm going to tell you guys about something in a second, but almost every trade from every stock that was currently on my runner scanner. You will see that is a total number of 50 trades. And once again, on $10,000 positions, that is a total P&L of 33.7 grand. That is 3xing your money in 50 trades, which is insane. Now, a lot of you immediately are going to freak out. This strategy has a win percentage of 38%. You see that happen very often. I have a video talking about this on my channel already, how a continuation strategy, a buy high, sell higher strategy, is likely going to have a lower win percentage, but its goal is to have a high risk reward. What are we doing in this strategy? We are buying strength and then we have no profit target, right? You guys noticed when I was going over my sell conditions, I don't have a condition where I sell a green candle. I am letting these stocks run until they complete their move. So really all we need to do is out of these 50 trades I take, all we really need to do is catch 4 or 5 big winners, which if I scroll through this again slowly, you might notice is the case. There's 4 or 5 really big winners. That is where you win in a strategy like this. It's a home run swing type strategy, and that's all you need. You can make very good money on a 38% win rate. We are trading our average win being 3,500, our average loss being 1,200. That is near exactly a 3-to-1 risk reward ratio. And me being a genius and being able to do my math in my head really quickly, I know that a 3-to-1 risk reward ratio has a break-even win percentage of 25%. So that's a real edge. This is what a real edge in the stock market looks like. You've got a 3-to-1 risk reward, and you know anything over 25% is an edge to you. This gives you a 13% win percentage edge over the stock market, right? This is what real numbers look like. I don't want my community falling for a lot of the crap I know you've seen on YouTube where all you need is a 3-to-1 risk reward and a 75% win rate, and you can make this much money. I'm not here to burst any bubbles. That doesn't exist. And if it does exist, it's very, very rare and it's a secret and it won't be around for long. I'm not saying it's impossible, but I'm saying it's not sustainable, right? An edge in a strategy like this is a sustainable strategy that you can continue to cook with over time. So there's the real numbers. Let me go over the one caveat I did say I wanted to bring up. I did not include trades that the strategies are currently in. So ELEV is currently in this strategy and actually up over $2,000. Quad C, it's in this trade and up over $5,000. ALT is in this trade and up over $10,000. So actually the strategy is looking a lot better, but since they're not sold yet, I can't actually collect the data from the open trade, right? So little caveat to add on to the back test there. But once again, if you made it this far in the video, you've got what it takes. I really appreciate you all taking the time to watch my videos, and I really, really hope you get to the end here and you sort of get to the meat and bones. And with that being said, I would like to give you guys a special discount. If you made it to the end of the video and you're interested in daytradingstrategies.net, you're interested in this strategy, this scanner, all my strategies, all my scanners, if you use discount code END, E-N-D, just the word END, in the checkout right now, you're going to get your first month for only $15. That's kind of a thank you for watching my videos. Don't leak that. Don't let other people know, but use discount code END in the link in the top of the description. $15, you'll get all my strategies and codes for the first month. So once again, really appreciate you. Obviously, if you made it this far, you're going to want to make sure you're subscribed to the channel because I'm posting content like this for free on YouTube all the time. So make sure you're subbed, make sure you like. With all that being said, I'm going to go ahead and sign out of this video, but I'm going to link you all to another video here about whether or not I think day trading is a scam.